Wall Street poised for bonus increases in year of the bank. So you can bet a lot of people are clicking on that story. Katherine Doherty is the author of that story. She's our Bloomberg News Finance Reporter. Katherine, it is only May, but the folks you talk to say that there's been some banner deals in the first part of the year that has led them to conclude already that it's going to be a big, big year for bonuses.
That's right. And we should caveat by saying it's still early in the year. So things could change. But right now, the projections are looking pretty rosy. And that's because the long-awaited comeback of deals, you've started to see that come through. We do have the big banks. They have just reported their first quarter. Yep. The second quarter looks to be pretty steady. So if the second half of the year takes a turn for the worse, that could change these projections. But right now, it looks like the payout, especially for M&A advisory, equity underwriting, quite strong. And as we've been talking about the volumes that you've been seeing across equities and fixed income as far as trading goes, those traders that are facilitating the buying and selling are also poised to see a pretty hefty payout if things continue as they've been going.
Yeah, and we've just seen so much underwriting of public debt for the technology companies, IPO market kicking up, and then we're, I guess, still on the docket for some time, maybe towards the end of the second half of this year for some mega IPOs.
Yes,
SpaceX and things. So I mean, you can certainly, if you wanted to, project out some pretty big fees for these guys.
Yes, but that is also with the assumption that those IPOs come through. Yep. I think that's if all things continue in these deals actually see the light of day, then yes, these bankers who are facilitating them will see their pay bump increase. But if they don't, then we could see a reversal. Don't expect any huge declines, but in terms of the 10 to 20% plus year over year increase that is projected right now, that is considering that all of these things kind of fall into place in the way that everyone would hope.
Because the way we used to do it when I worked on the street was around December, you'd have the really, really big discussion about how much the bonus pool actually was going to be. And you use November actuals and December projected. And that's what you use to set up your bonus pool. You're accruing for it all year, but to say who gets what.
So that's right. And there's a lot of months between now and December.
Exactly. Again, I've been sitting on the wrong side of the seat when my boss will come in and say, yeah, we had a great year, but we had a terrible month last month, so we're going to be cautious here. I'm like, what?
There's always a reason for the managers to say that, to come up with some angle. If you click on MAGO on the Bloomberg terminal, it gives you a snapshot of mergers and acquisitions and $1.8 trillion of announced deals so far this year. That's up almost 36% from the same time a year ago. So I'm guessing, Katherine, that in terms of bonuses, projected payouts, investment banking advisory is top of the list.
Yes. I think that right now, and that's from a year ago, that is not the discussion that we would have been having. I think that, again, so there were so many months and quarters that the narrative was the long-awaited comeback of deals. Now we're actually starting to see that come through. But it hasn't been quarter after quarter. This has only been really the end of last year and the beginning of this year that we have actually seen the numbers. And if the rest of the year falls into place, again, as projected, the pipeline is healthy, is what executives have been saying, then yes, we might see that these numbers do follow actually the numbers that you're pointing out on the terminal, which is the actual deal flow that the bankers are working on. And that's why and how they get paid.
What's going on with headcount on global Wall Street? Is this, I'm thinking that AI could be a negative impact for headcount on Wall Street. What are we seeing so far? So
executives were asked about this during first quarter earnings, and a lot of them echoed the same sentiment, which is that right now headcount is flat and AI is helping and making bankers more efficient. But right now it hasn't led to that next step that everyone is expecting, which is headcount reduction. A lot of the executives are saying, yes, and it's not just their bankers, just across the entire company, their executives are getting more efficient, but that's allowing them to work on more deals. It's allowing them to increase revenue, but not hire as much as they might. So instead of cutting folks right now, I think the narrative is more talking about keeping things flat.
We look at the markets and record highs for the S&P 500, the NASDAQ, and we come back to this theme over and over again of there's so many headwinds, yet stocks just continue to move north. So far, the volatility that we've seen has not been negative for trading desks. During those earnings calls, did anyone talk about, the turn in volatility, how it can go from good to bad quickly?
Good to bad volatility is kind of what you need to narrow in on, right? Because at the end of the day, if you are on one of these bank trading desks and you're just facilitating and helping your clients reposition, volatility is a good thing. So as up until now, it's been good volatility if we are distinguishing between good and bad. And it's the same for the market making firms outside of the banks. They've really been topping their own records year after year. And so I don't believe, and it really, if you go into different asset classes, equities has been kind of the strongest across the board, but fixed income follows close behind.